Two numbers matter now: Bitcoin mining costs and strategy balance sheet strength. JPMorgan analysts say Bitcoin's short-term path depends less on miners and more on one listed company. That company is Strategy, the largest corporate holder of Bitcoin on the planet. The team led by Nikolaos Panagurtsoglu points to two main pressures on the Bitcoin price. The first is a drop in network hash rate and mining difficulty as new restrictions in China push high-cost miners out of the market. The second is market anxiety around recent comments from Strategy Chief Executive Feng Lei. A falling hash rate usually boosts miner revenues for a while, at least until the next difficulty reset. Right now, Bitcoin trades close to its estimated production cost of $92,000 per coin. As profits shrink, some miners with very high costs have been forced to sell part of their Bitcoin reserves in recent weeks. According to JPMorgan, these sales add pressure but are not the main driver for the next leg in the market. Instead, the bank argues that Strategy's financial resilience is the key variable. If investors trust the company can hold its coins through volatility, sentiment around Bitcoin stabilizes. If they fear forced selling, every dip feels more dangerous. The bank highlights a simple gauge known as the mNAV multiple. This ratio compares Strategy's total market value with the market value of the Bitcoin it holds. Even after a sharp pullback in the share price this year, the multiple sits around 1.13. As long as that number stays above 1, and Strategy does not need to liquidate Bitcoin, analysts believe the worst of the current correction may be behind us. JPMorgan also points to a fresh liquidity buffer. Strategy has built a reserve of roughly $1.44 billion in cash and equivalents. The bank estimates this war chest can cover about 2 years of dividend and interest payments to shareholders. That means the firm should not have to dump coins just to meet near-term obligations. The message is clear: balance sheet strength, not panic selling, will decide whether Strategy remains the flagship corporate Bitcoin holder. Even so, the company has slowed the pace of its buying. From mid-November to the end of the month, Strategy added only about 130 Bitcoin, paying on average just under $90,000 per coin. In total, the firm now holds around 650,000 Bitcoin. At current prices, that stack is worth close to $59.8 billion. It is a massive concentrated bet on digital gold. There is another moving piece in this story. Index provider MSCI is reviewing whether Strategy and similar crypto treasury stocks should stay in key equity benchmarks. A decision is expected in mid-January. JPMorgan sees the impact as asymmetric. If Strategy is dropped, forced selling from index funds might be limited. But if the company stays in, demand from passive investors could support a strong rebound in the share price and, indirectly, in Bitcoin sentiment. The market has already tried to price in the risk. Since early October, when MSCI first flagged a potential reclassification, Strategy shares have fallen about 40%. That suggests investors have baked in not only an index exit, but also similar moves by other benchmark providers. Others in the industry share a cautious but constructive view. Bitwise investment chief Matt Hougan argues that even a negative ruling by MSCI would not force Strategy to sell its coins. He notes that prior index additions drove large inflows into the stock without dramatically changing its long-term trajectory. Hougan believes fears of the company trading below the value of its Bitcoin reserves are overstated. Even if the stock did slip to a discount versus net asset value, he expects the firm to keep holding its crypto rather than liquidate. The key obligations on Strategy's balance sheet are long dated. The company owes around $800 million per year in interest and scheduled debt payments. According to Hougan, those commitments alone are unlikely to trigger urgent asset sales. For Bitcoin itself, JPMorgan keeps a cautiously optimistic long-term view. The bank compares Bitcoin with gold, adjusting for volatility and market depth. That model still points to a fair value near $170,000 per coin over the next 6 to 12 months, assuming market conditions stabilize. For traders and investors, the takeaway is straightforward. Watch Strategy's mNAV multiple, its cash reserves, and the outcome of the MSCI index review. Together, they could signal when the current stress phase is ending. In the meantime, miners, macro conditions, and liquidity flows still matter, but this report suggests one balance sheet can outweigh them all. For now, markets are watching. This has been BlockBrief. Stay informed, stay ahead.